It was supposed to be the big financial story closing out 2025 on the Jamaica Stock Exchange. Dequity Capital Management Limited was gearing up to list on the main market, offering over 650 million shares to the public at $1 each. They had a diverse portfolio: healthcare, microfinance, real estate, and they had bold plans to use the cash to settle debt and to fund new investments. Now on paper, it looked like the next big opportunity for Jamaican investors. But then, right before Christmas, the news dropped. The IPO was terminated. The listing was off. Welcome back to the channel. Today, we're not just looking at the headlines, we're asking the hard question: what really caused the Dequity Capital Management IPO to fail? Now, before we proceed, if you want more videos like this, please hit that like and subscribe to the channel right now. It will really help our community grow. Plus, you will receive notification when we release more content like this in the future. Now, on the surface, the official answer is very simple: mathematics. When Dequity put out their prospectus, they set a hard rule for themselves. For the IPO to be successful, they absolutely had to raise a minimum of 500 million Jamaican dollars. The offer opened and the closing date of December 18th came and went. When the dust settled and the lead broker, VM Investments Limited, tallied up the applications, they had not hit that 500 million threshold. Because they missed the mandatory minimum, the terms of the deal dictated that the entire offer had to be scrapped. They couldn't just take the partial amount and list anyway. So, just before the holidays, the termination was announced, and the process began to refund every single cent to investors who had subscribed. But that's not the only technical reason. The deeper, more interesting question is why. Why did the market give this IPO the cold shoulder? While we don't have the internal data on exactly how short they fell, we can look at the context of late 2025. First, timing is everything. Launching a massive capital raise leading into December is always a gamble. Liquidity tends to tighten as individuals and businesses focus on holiday expenses and end-of-year commitments. Asking the market for $500 million during the tightest month of the year was always a heavy lift. Second, we have to consider market appetite. Dequity is an investment holding company. While they had success raising money privately before, convincing the general public to buy into a complex portfolio of different assets is much harder. Investors in this economic climate, still cautious about interest rates and inflation, may have looked at the $1 per share price point and decided that the potential reward just did not justify the risk of a new listing. Ultimately, the failure of the Dequity IPO serves as a reality check for the entire market. It proves that a public listing is never a guaranteed slam dunk. You can have a glossy prospectus and big plans, but if the pricing, the timing, or the investor confidence is not exactly right, the market will always walk away. For now, Dequity Capital remains a private company and investors have their cash back. Now, whether they reconstruct the deal and try again in 2026 remains to be seen. But this holiday season, the Jamaican Stock Exchange proved it is a demanding marketplace. Thanks for watching. And click the link on screen now to watch another Jamaican financial content. Catch you in the next video.